continue recording now. Okay. Yeah, so I was just saying that businesses grow, right? As they grow, there will be an extent whereby you, the owners of the business who started, maybe you're just a two or one, let's say you are just alone first. You reach at a point whereby you start even involving others to help you in the running of the business. You get it, right? At that point, as the business grows, since there will be so many stakeholders, such as the investors are interested in what you are doing in the business, the government, like in Zambia, like the ZRA guys, they're also interested in knowing, are you making profit or not, so that they can tax you rightly. And all these other interested parties, they're interested in knowing what is going on in the business. Because the business has grown and there's got a lot of people that are interested in what is going on. So it is necessary for the business to print out the record of what they are doing, especially throughout the year. So they print out the record of all the transactions that they engage themselves in throughout the year in what is known as the financial statement. Is that clear? Those records are called the financial statement. So when I'm talking about the financial statement, I'm talking about the following financial statement. The first one is called the income what? The income statement, all right? The income statement is also called the profit and loss account. If you can, yeah. Can't see. You can see this. What if I do this? If I do this, you're able to see? Very good. It is called the income statement. That's the first one. The income statement, by the way, is also called the statement of what? Statement of what? Profit and what? And loss. Is that clear? Why you should know all these names? Because the examiner sometimes will tell you, prepare a statement. Prepare a statement of profit and loss. Then you just don't know. Statement of profit and loss. So this is the statement of what? Of profit and what? And loss, which is also called the income what? The income statement. Then the other statement that we produce, I'm talking about financial statements now in general. There is what is known as the statement of financial position. You get that one? The statement of what? Statement of financial position, which is also called the balance what? The balance sheet, the BS. So if you are asked to prepare the statement of financial position, you're basically asked to prepare the what? What are you preparing? The balance sheet. You get it? Which is the same as the financial statement. But now, the financial statement is really general because all these things, they fall under the financial statement. Is that clear? Then the other statement that I don't think you talk about at this level is the cash flow statement. The cash flow statement. Okay? The cash flow statement. Then from the cash flow statement, you have the statement of the changes in equity. Those you don't do them. I think you do them in the financial statement analysis, not in this course, but as a course. By the way, when you reach somewhere course here, you do these financial statement things as a course, like you do that the whole year, like just doing the financial statement. Very interesting. So it's something that is really huge and broad. You have to get to understand that. So for the purposes of your course, we will just focus on the income statement and the what? And the balance sheet. Is that clear? Yes. Let's start with the income statement. How do you start with the income statement? Number one, there is always a title. This is the format I'm giving you. there is always a what? A title. How does the title go about? How do you go about the title? Number one, there is a name, okay? Name of the what? Of the entity, which is the business. From the name of the entity, there is name of the statement, and the period. With the period, this is the date. You can say for the year ended this. Usually, you say for the year ended this. You write the full date, like day and date na year. Right? Day, day, month, and the year. Not day, date, and yeah. You understanding, right? So that's why when you're writing this, don't just start writing sales. You start writing. No. You start by saying name of the company, name of the entity. If your company is called Pandamano, you say Pandamano's, the name of the statement, which is the income statement in this case. So Pandamano's the income statement for the year ended the 31st December 2022. That is your title. Is that clear? Should tell us the name of the statement. This is the title, how you go about it. From the title now, what is the format? Here is the format for the income statement. Just to get the format so that when you get the example, you're just putting in numbers in the same format. It will be very straightforward. And you will, in the trading account or in the trading business, the business that engages in selling and buying, that is the trading business. You start with the sales. So let's start, we have two columns here and have that. So we are starting with we start with the sales already. When you're preparing the income statement. Trading and profit and loss. But usually we just call it the income statement because you can't just prepare a trading and end there always. You exceed. It's more like the profit and loss is in the same, like it's just joined. Yes, but I'll show you where what's this? The gross profit. Not the gross profit. The trading account, we end just before removing the expenses. Immediately you start removing the expenses to get the net profit, then that is your profit and loss account again. So usually we just call it as one as the income statement. It's just one. Is that clear? You can never be asked to say, can you prepare a trading account, prepare a loss and the profit and loss account? No, you are just asking the income statement as one. You get it? Okay. So now, the sales, you write the sales. You're getting it? Then from the sales, sometimes you can, we have 1, 2, and the inner column here. Yes. If you want, you can do the inner column. It's usually called the inner column where you do most of the calculations and other adjustments. You get it? Okay. So let's go. So the sales, you write here, a figure. From the sales, there is what is called the sales return. Sales what? Return. Now, the sales return is also called the returns inward. Did you get it? The returns inward. So with the returns inward, you record here and should be subtracted from the what? From the sales. If I put these brackets, I mean subtraction. We never put minus in here. Put the brackets, we know what you mean. Is that clear? Yes, madam. Sorry? Like the sales and the sales return, you record them in No, not really that you are recording them in the inner column. You get it, right? So most of the times you find that, especially the sales return, people put them in the second column. Like you subtract from here. For example, if you put it here, then when you do the subtraction, this minus that, what do you remain with? You remain with the net sales, right? You remain with the net sales. Yes, you remain with you remain with the net sales. The net sales simply means sales minus the returns inward, right? The sales return is same as the returns inward. You should understand these words are very, very important, because when you go in the questions, some examiners will use returns inward, others will use sales return. Yes, madam.
Subtract the sales return and the sales.
Yes.
Also known as turnover.
The turnover. What is the turnover? Okay. We need to use these words categorically. Yes, because these very words, they have got their own meaning, right? We are following, right? Ma? I don't know that. Which slide? This one from, you are no longer seeing. Let's see, are you able to see now? Okay. What do you remain with when you remove that is the net what? The net sales. Net sales simply means sales minus it. Like you've made sales, right? Then plus minus what they have returned. So those customers have made sales too, but they have decided to just return the same thing. They say, these things that they've given us, maybe they don't meet our quality or whatever. Those are called the sales return. So you should remove them, and you will remain with what? With the net sales. So usually most of the time you will not write net sales, but if you write net sales, it is still the same thing. There is no difference. You write here like that minus that. You get it? What you will have here is the net sales as the figure. You're following, right? So you write your net sales here, but your net sales. From your net sales, what are you going to do? You will remove the cost of what? You less the cost of goods, right? Cost of goods. Or I should write in full. Cost of goods. You are removing the cost of goods. You put a full colon now. Under the cost of goods, you have the following things. There is number one, the opening what? The opening stock or opening inventory is the same thing. Opening what? Opening stock. You write here. I'm showing you the format today. Then from the opening stock, what do? You add what? The purchases. You add the purchases like that. From the purchases, what I'm going to do is to less what? The returns outward. You're following, right? Returns outward is same as the purchases return. In practical terms, it means that you have gone to purchase some goods for resale, and then maybe when you reach, you decide to think, no, these things, they don't meet our standard. Let's just return them. Those are what you call the purchases returned. You have returned the things that you purchased. So less the returns outward, which is same as the purchases what? Returns outward. Then from the returns outward, after you have less the returns outward, you will add, what are you adding? The carriage inward. What is carriage inward? Carriage inward. What is carriage inward? What is carriage inward? So carriage inward is basically the cost that you incur when you're bringing things into the business, such as offloading costs, You know those things like how much you incur as you're trying to bring the things into the business called carriage. Carriage what? Carriage inward. Then from the carriage inward, after you have added the carriage inward, what else do you need to remove if there is anything? The closing what? Talk. So what I want you to do is to understand which one, like the positions, where do you put what? Because very soon we will start doing adjustments. So for example, in the adjustment, you just be given the closing inventory. You should know where you place what belongs where, and what you put where. Let's the closing what? The closing stock, like this. Whatever you total up, everything up here, you'll be doing all these things. The amount that you get here, you write it here. You get it, right? You subtract it from the what? From the net sales, and what you will remain with is what is called the gross what? The gross profit. Did you get that? The gross profit. So basically, the gross profit is this sales or net sales minus what? The cost of goods. What we mean is that sometimes you may not have the sales retained in the trial balance. If you don't have the sales retained, you just record the sales just like this. This part will not be there, and this one for net sales will not be there. You won't have the net sales. So what you will do is you remove the cost of goods directly from the what? From the sales, and what you remain with is the cost of goods. Did you get that? So sometimes again you may not have the returns outward. You're not given. So it means you just add the purchases to the what? To the opening stock, and sometimes you may not even have the carriage in one. So it means that you just go straight from, you add the purchases to the opening stock, then you let the closing stock. It is just about how much information you have. This one I've given you, it has got almost all the information. Is that clear? Yes, ma'am. We are together. Okay. Do you have any question? Mr. Chivinda, sir, do you have any question online and the friends? Okay. So from here, what we will have is from the gross profit, we will add other income. Add what? Other income. Now, what is under other income? Other income, things such as, number one, follow this one. Rent received, not paid, received. Usually to be specified that you have received what? Rent. Rent received, in case you have rent received, dividend received, like as long as you have received anything, like, yes, discount received, thank you. Discount what? Discount received, not allowed. No, we usually have two discounts. There's a discount that you allow as a business, and a discount that you do what? You do receive. So the discount that you receive to you is a gain. It's the other income. Is that clear? What else? Commissions. Thank you. Commissions. You add here commissions. You should just get the format. Everything will be very easy when we start plugging in numbers in. 25 marks. A lot of marks. Come on. Usually in account, you don't have a lot of questions, but you still choose. You know, when one question like this one comes, and in accounting, you cannot fail. Like you can't just fail. No one knows you just can't fail. In the university, like zero. You can't get zero unless you are not super serious with school. That's a good part, because you can't get a zero in a question. Even if they do it, you can't get a zero because they mark entries. You understand? You can't get all the entries wrong unless otherwise. You get it, right? Yeah, they don't just mark the last figure, the balancing figure, because most of the time people make mistakes. So it usually doesn't balance, or you have challenges. People in an exam usually stress, so you don't manage to make it balance. But for you, I want you to be able to balance it because you're learning. Then the other thing that you should do include here is a reduction in the allowance for receivables. The allowance for receivables is also called the provision for doubtful debt. Get those two words because they want to bring all of them. That's why I'm telling you to take record of the words, how they are used. The reduction in what? In allowance for receivables. In allowance, is this clear? Okay, in allowance for receivables, that's right. Reduction in allowance for receivables, right? Reduction in provision for doubtful debt. Yes. The provision for doubtful debt. Reduction in the allowance for receivables. The allowance for receivables, it is same as the provision for doubtful debt. So in case, the reduction in allowance for receivables. Allowance for receivables. You get it? I'll explain what it means more. Now, what is allowance for receivables? And what do we mean by reduction in allowance for receivables? And why does it qualify to be an income? Allowance for receivables simply means that when you have the debtors, the people that owe you are called the debtors, okay? Or the accounts receivable. The receivables account that you have the record of them, right? Then when you look at them, you'll be like, but this person, there are some people that you really doubt, you're not very sure if they're gonna pay you back. You're following, right? When you just look at them, you just doubt if you're like, it's just God. You know, you have such people, they owe you, but even yourself, you're like, for this, if I receive, okay. It is just God. In short, you're doubting them, okay? Then what you do as an accountant, you're going to, for example, they owe you, like all the debtors that owe you, you have, they owe you a 10,000. Let's say they owe you a 10,000, right? Then when you realize that some people I'm doubting them, then you ask yourself, how much am I not expecting to receive? You get it, right? That is called the provision for doubtful debt. For example, you say, okay, I think 2,000 will not manage to come. That one which is coming from Chite. You get it, right? So what you will do now, when you're recording the receivables, you are not going to record the 10,000. You will record the 80,000. Like that's the money you expect, because receivables are the amounts that you're expecting to receive from the people that owe you. Okay. So you will say, no, I don't expect 10,000. We are expecting 80,000. Why 80,000? Because, okay, that 2,000, we just created that. We are really doubtful. We are not sure if we are going to receive that 2,000. You get it, right? So when you are, follow this, I want you to understand this because this one is one of the adjustments that you find down there in the adjustment. So we have recorded 8,000 because we are not sure about a 2,000. Then the message that I want to communicate to you now is the concept of the decrease and an increase in the doubtful debt, in the provision for doubtful debt, or in the allowance for receivables, or what I mean by reduction in the allowance for receivables. This is what happens. When I check, I'm like, I want to receive only 2,000. Again, 2 days after, maybe the other one again, whom you thought you would manage to pay so that you have the 8,000, another data, you find that maybe they have been, they have been fired at work. You get again. So again, you're not expecting maybe 1,000. So it means that your allowance for receivable, Because your doubt will increase. The more your doubt increases, it means there is an increase in the allowance for receivable, or there is an increase in the provision for doubtful debt. It means that there is an increase of 1,000, then you don't expect a 3,000 now. Are you following? You're able to follow. A 3,000 is not expected. So it means that you, when you record, you will record what? What are you going to record? A 7 what? A 7,000 from 10,000, because 3,000 is a doubtful debt. That's a provision for doubtful debt. This is what it means when you say there is an increase in the what? In the doubtful debt. It means there's an increase in your doubt. What it does, it reduces the what? The accounts for receivables, or the amount of money you're expecting from people reduces. You get that? That is an expense. So the increase in the doubtful debt, or in provision for doubtful debt, is an expense. So under expenses, you write the increase in provision for doubtful debt, or an increase in allowance for receivables, 1,000 as an expense. Did you get that? It's an expense because it's a reduction. Then why do we put a reduction in allowance for receivable as a what? As a receipt? It's because, let's take now, you were not expecting to receive the what? A 2,000 at first. Now that person you are doubting that maybe they're going to not pay you, you just hear that they found a good job. You get it, right? Then, knowing that they found a good job, what will happen? What you're going to do is you're going to say, Kansi, it will reduce your doubt in simpler terms. You're starting thinking that, maybe, I think these guys, they may want it, they may manage to pay. Okay, I think they can even manage to pay 1,000. You're following, right? They can manage to pay what? 1,000. Which means, how much am I doubting? It's just a what now? 1,000. You're following, right? Then it means that instead of recording 80,000 as the accounts receivable, you record 9,000. You're expecting a 9,000, like you are very expectant. You're following, right? So now, since from 10,000, you're following, right? It was standing, like the allowance for receivables was standing at 2,000. It has reduced to what? It has reduced to 1,000, right? It means that it's a gain to you as a business because your doubts have reduced. Therefore, you have started increasing the account for receivable. That's why the reduction in the allowance for receivable is added here as an income. Did you get that? So whenever the allowance for receivables or the provision for doubtful debt decreases, please check the amount by which it has decreased and include here as other income. Don't worry, we'll do questions. We'll do questions. Then I'll repeat this explanation. Here it sounds so strange because there are no numbers here. You guys are used of numbers, but it's better you get it now so that when you do the question, you can just more like the repetition of the same thing. Got it? Right from here, what I'm going to do is to list the expenses. We are finishing, don't worry. You guys are not getting tired, like, look, pardon. How do you get tired like this? Let's expenses. How do you list expenses? Now, all the expenses should be removed. Give me expenses that you know. Number one, rent, the rent that you pay. Yes. So rent, salaries and wages. What else? Yes, it just comes down here. After, because all this, by the way, these other incomes, when you total them here, you add them to the gross profit. They will be added to the gross profit as total income now. So what you will have here on top is total income. Total income. That amount will be somewhere here, like the sum of those other incomes plus the gross profit. So salaries, what else? Insurance. Insurance. What else? Insurance. What else? Bad debt. Have you ever heard of bad debt? Yes. Bad debt increase. I'm just from talking about this. The increase in what? In provision. Provision for what? For doubtful debt. Right there. The increase in provision for, remember, you just record the increase here. The reduction is recorded under income. You got that? Then what else do you record? Depreciation. Depreciation, right? Yes, carries outward. Thank you. Then from here, you record what? Carriage what? Outward. Observe that the carriage inward is a cost. Where is it? It's a cost. It falls under cost. The cost of goods. But the carriage outward is a what? It's an expense. Understand the position. Very important. Depreciation, carriage outward, increase in provision for doubtful debts, the bad debt, insurance, salaries, rent, whatever expenses and the other expenses. All the expenses are written down here. Once you record them here, you sum everything, okay? Whatever the sum you get is here. You will sum all the expenses, make one figure, you record it here, and then you subtract from the total income. You got that? Yes. What you will remain here, when you do the subtraction, you remain with what is called the net what? The net profit. Net what? Net profit. How do you get the net profit? All the expenses subtracted from what? From the total income, right? The total income is somewhere here on top. So like all these expenses, sum them, make one figure here, subtract that figure from the total income. What you get here is what is called the net what? The net profit. Is that clear? When you're done, when you reach here, it means you are done with the income what? Income statement. Nothing much to suffer, just to follow this. Any questions? Don't have any questions? Hello? Mr. Chirinda and the friend, are we together? Do you have any questions? You yourself will be just knowing that I'm listening. Hello? Do you have any questions? You guys don't have any questions? You don't have a question? Eh? Right.